Welcome to Tradespoon. My name is Vlad Karpel. I'm the only founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, analyze different sectors, stock opportunities, and talk about risk management. And the goal is to answer any questions you might have. My brief bio. Those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscriber. My background was Executive Vice President, Head of Technology at Options Express. From its inception to 2007, Options Express was an online broker-dealer acquired by Charles Schwab. At some point, it was worth over $2 billion. Very proud of that experience. Since I left Options Express, I worked as a consultant and investor in several financial technology firms here in Chicago. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specialized in statistics and artificial intelligence. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into a trading plan, let me know if you guys have any questions. Let's look at the market. So Spiders continues to make new 52-week highs, right? It cleared the August high levels and retesting April or even we were at this level close to February of 22. April, February 22, the very close levels, around 450. So next level of resistance is 450. We failed to break through this level in April of 22, and now we're exactly at that same level. You have a broad-based rally yesterday after the Fed decision and ECB decision, right? Basically the Fed decided to skip interest rate hikes. It did indicate potential 2 more rate hikes down the road if the inflation doesn't drop further. So relatively hawkish statement, but the market continues to ignore, right, what the Fed is saying, with the idea that unemployment is low, and Fed actually already said that they're not going to lower interest rate this year, but next year they'll probably drop by close to 100 basis points. And market looks, 6-12 months into the future. So at this point, bulls are pushing market higher, and we did have a broad-based rally yesterday, whether it was, Microsoft's and NVIDIA of the world, right? XLK are actually retesting all-time highs, right? XLK is at all-time highs, retesting all-time highs, and semiconductors are retesting all-time highs. So it's very, so for bear argument, right? It's, the problem with the bear argument is that usually if it is a bear market, you don't have semiconductors and technology stocks are at all-time high, right? That is a head scratcher for the bears and myself. I've been in bear camp for many months, for the past year and a half. So I'm surprised by the reaction in the market. I do realize that unemployment is low, and Fed will eventually start lowering interest rates, and we are, finished the first half. But still, this vertical move up in whether it's the semiconductors, where since April we never had any meaningful pullback, kind of vertical move up. Same thing as in XLK, right? Basically, since March pullback, we have a vertical move up. And we're trading the same valuations that we have traded in 21, right? When the market has peaked. But and I understand that unemployment is the same level and low, but the rates are not, right? The rates were at 0 in 21, and now they're at 5%. And that is not going to lower them, at least not in the next 6 months, and maybe even longer. So there is a disconnect, but they also don't fight the tape. So as long as we are above 430, right, above this previous breakout, the August high, bulls are in control, right? And we can trade sideways, we can continue trade higher and potentially get to 450, 460 level. As we approach, and the next catalyst is earnings season, right? So once people are going to start thinking about earnings season and multiples, is it justified to have the same multiples as in 21, or is it not? Then there could be potential reset. So I would still go through this exercise, right? Positive and negative visualization. So on one hand, we can retest 460, right? That would be March or February high, right? This is a reactionary rebound where we traded back in the beginning of 2022, beginning of the last year. So on one hand, the next level of overhead resistance is 460. So we can go up by 20 points. Going into the earnings season, the reaction to the earnings season. So end of July, end of February, end of July, end of August, right? 20 points to the upside, or we back into the range trading and we drop to 420, right? Minus 20 points. So those are the two scenarios going into the next earnings season, right? One, we continue make new highs, right? Semiconductors break through the right? Semiconductors, XLK, they need to break through the all-time highs. If they break through the all-time highs, then spiders will continue to rally to 460. If they don't and there is a reversal, then spiders will pull back. Right? Scenario number 2. So those are the scenarios, and why this exercise is important, because that helps you determine the position size, right? If you want to make 5%, if you think market can go another 5% higher, or it can pull back 5%, that will help you to determine position size, because 20 points, position size should always be the same in terms of risk management. And if you imagine, let's say $10,000, I propose no more than 2.5%. Right, and it's written on all of our content on the website. So 2.5% would be $250. Right, so position is $250. I usually break it in at least 2. So I would risk maybe $100 per trade on a $10,000 account. On $20,000, that would be $200 per trade. But that what helps you determine the position size. So this is a very important tool. And I would say the most important process in trading, right? Determining position size and always trading the same position size. So let's go through this exercise, since we need to get ready for the next earnings season. Now that inflation data is behind us, ECB, FOMC meetings are also behind us. There's not much going on next week, except Powell speaking again, but we do have triple witching expiration today, right? So June, have quarterly, monthly, weekly options. Futures are expiring today, so maybe more volatility today as well. So how many of you think we're going to get to 460, right, in the next, probably end of August, right? End of July, end of August, versus we pull back to at least 420. So 1 or 2. Type in 1. Type in 1 if you think we're going to go higher, or type in 2 if we're going to go lower. Michael 1, thank you. Irene, James, Martin, Patrick, Warren, Mark, Joe, FH, Anne, Andre, Claude. All right, 2, ones. All right, so it looks like majority of the people said, maybe 75% people said 1, 25% 2. I'm gonna go with 2. I think, it's kind of looks like a typical blow off top phase where market continues to rally. I think, elevator up, usually there's an elevator down. Not sure what the next catalyst is. I think it's probably earnings season, right? That we need to keep an eye on. Why do my main reasons are, again, I would pay attention to the bond market, right? I still think that the bond market is more accurate. So it hasn't broke through this level. In theory, the 10-year, in a normal bull market, we still have a very steep yield inversion, right? Bull can argue that, market is forward-looking indicators, unemployment is still low, Fed is going to start lowering interest rates next year, market sees it, so 2-year yield will continue to go lower, and 10-year yield will continue to go higher. That has not happened yet. We're still, at record inversion, 100 basis points again. We were at 80, now we're at 100. That's not considered to be a healthy bull market, right? And it's still a restrictive environment. Rates are not going higher, right? We actually kind of have the stop. And I think in the next week or two, maybe another attempt go higher, but eventually we're going to go lower, right? And you can already see this in the $10-year yield, sorry, 30-year yield, right? 30-year yield pulled back significantly. It's sitting at the 50-day moving average, it's sitting at the 200-day moving average, and it's sitting at this important support. I'm trading through this level many times. And so if we continue to trade lower on the 10 and 30-year yield, right, which is not considered to be a healthy equity market, right, then that would be an indication of the pullback. So I still don't see vertical moves in 10 or 5-year yield, and I think bond market has a better probabilities in terms of whether we will or will not have recession. The other one is dollar. Dollar had a strong pullback, right? We had 3 weeks of rally, right? And that pulled all of the value stocks down. But last 3 weeks, dollar has sold off, and again, it's retesting year-to-date lows, right? It's retesting year-to-date lows with 50% retracement. And this is highly correlated to the move in the value stocks, right? In the past 3 weeks, value stocks broke the downtrend, trading close to year-to-date high, and again on the pullback in the dollar. So I think dollar move is overdone. We're approaching very strong support level. If the dollar bounces back up, value will revert down. And that's what fueled the current rally, right? It's not just the few mega cap technology stocks and semiconductors on AI perspective. It's also pulled back in the dollar. So if the dollar rallies and value stocks pull back, then I think this rally will probably pause. Another argument, again, small cap stocks, not a healthy bull market, right? We spend majority of the time below 50-day moving average, 200-day moving average. It has hard time breaking through this downtrend. So this is not a classical bull market. Small caps should be leading, right? High yield, right? The risk taking. High yield should be leading. High yield is not going anywhere. Bitcoin, continue to make, lower lows, lower highs, another proxy for risk taking. Crude oil, not that far from 52-week low. So all of these signs that, Europe is in recession, right? Germany is in recession. China has hard time stimulating their economy and reopening. So it does not sound like 21, right? It doesn't feel like 21 or 20. It feels like more of a 2000, 2008. And there are comparisons being made. Obviously, this rally is a head scratcher. I don't think semiconductors, if you go back to 2008 or 2000, 2000 semiconductors, and we're not at 52-week high during those bear market. So very unusual market, hard to predict, especially to time the market. But I still think that you either build market neutral strategies, or you take you don't chase the rallies, you try to protect your portfolio. Any questions on market? All right, so how do we help how do we take advantage of the market conditions on Tradespoon? We do have different services, right? This is Elite Circle. In Elite Circle, you can participate in live trading room 5 days a week, morning session and closing bell session, and we also give you access to all of my trades. You can enter your phone number and receive alerts, or you can go to Trader Log and actually see daily trades, right? So Transocean, right? So I have Transocean. I'm trying to close got into a cover call, right? I bought the stock, trade around it, now sold options. So you have an example of cover call. Or I trade, either only options or only stock, like Costco, right? I think there's still going to be rotation into the value stocks, maybe for another week or two. So I did enter Costco. So that's an Elite Circle, right? We also have different, so this is where you can actually see my trades. And Shadow Trader is similar. You only see the Elite Circle, you get access to everything. Shadow Trader, you just have access to my trades. If you're only comfortable trading options or option spreads, that's Spread Trader or Premium Portfolio. If you're only comfortable trading stock, that's Robo Investor Portfolio. If you just want idea generation, we do have different picks services based on neural network models. It's all based on artificial intelligence. It's same kind of concept where you train, you learn on the data, and make forward prediction using neural networks. We have active trader, weekly trader, monthly trader, just based on how long you usually hold the position. So I'll go over active trader. Today, CrowdStrike, right? So you can see some of the security companies are in strong uptrend. Model has identified that. So CrowdStrike is one idea, right? And same thing, we'll give you the suggested entry price, right? We're trading at 158. Model basically sees either 159 or 150. And usually you just look at the pre-market futures. If you see a sharp pullback, 1%, 2% pullback, then model basically says wait till 150. If you look at the pre-market futures and they're stable, like today, then 158, 159 is potentially where you want to consider going long, right? And again, breaking into two trades, right? Maybe half at 159.81 and half at 159. So that would be, and you're looking for 1% target gain, 1% stop loss in some of these names. And same thing with Google, right? If you're not comfortable trading stock, you can always trade, or if you're looking to trade options, we do give you same kind of idea. We give you suggested options price. Usually it's weekly options in the money, but the prices are translated based on the stock levels, right? So instead of buying Google at 158 or CrowdStrike at 158.47, you can buy 148 call for $2.30, which would translate to the suggested entry price for the stock, right? 150 level, 150 or 159. So that would be the option trades or stock trades using active trader. Active trader model is a short-term model. It sees momentum for a couple of days, right? And again, you have to make a decision which of the 4 positions you want to have. I propose still not to have more than 4 positions at a time with maximum loss of 2.5% because of the risk management, right? Market is overbought at any given point. You can have elevator up, you can have sharp pullbacks. If you have 4 positions with 2.5%, then you know that your maximum loss is at 10%. That's the most important rule in trading, right? Is determining position size and number of positions. There's a few more rules we go over during live trading room. Wait for 2 to 3 days to confirm the trend change, right? We were trading in a kind of a sideways market in spiders, right? But you look at 4:30, right? The breakout of August high. You have, week 1, week 2, or day 1, day 2, day 3. It's a confirmed breakout, right? Confirmed breakout above 4:30 level. Bulls are in control as long as we're trading above 4:30, right? 1 day usually doesn't set the trend. So right now we're in definitely strong breakout of August high. When you trade, again, give yourself more space, right? If you think 20 points, spiders can go up 5% or down 5%, maybe give yourself another, go 7% on to the stop levels. That will force you to, if you preserve the size, position size, and you're giving higher stop loss, that means you need to buy less shares, right? So it will control the size this way, position size. Look at ABC patterns. Do not trade naked options, right? Naked puts and calls. Try to use spreads. It's emotional intelligence, right? Psychology is very important. I do spend a lot of time on Yellow Tunnel or during live trading room, talk about how important it is to be self-aware and maintaining your journal, right? To write down your journal. Very important. All right. Any questions so far? In terms of models, in terms of services, opportunities? All right, so I still think, based on my Kafka trade, and let's look at today, that the value stocks will continue to outperform. Today we have triple witch expiration, so it looks like, let's see, spiders and SMH flat. So it looks like still value stocks are slightly higher. I mean, up 20, quarter of percent, where QQQ and semiconductors are flat. So I still think that there will be a rotation to stock like industrials, right? Industrials are at all-time high, right? We do have a breakout in year-to-date high, and basically retesting all-time high on industrials. So that's been a strong sector. Energy is oversold, right? So we could potentially have another 1 or 2 weeks. We haven't made new highs this week, but maybe next week, another continuation. Defense sector has been underperforming, but we do have a pretty meaningful rebound in consumer staples, REITs, and utilities. Small caps starting to, we did make incremental higher highs, higher lows this week. What else? And technology, I probably wouldn't chase until we do have a meaningful break above this level, right? If SMH breaks above this level, XLK breaks above this level, that would be your green light. Okay, you can follow those AI stocks. But until you see a breakout, you do have this vertical move to the upside. I think it has exhaustive nature, so there is an opportunity, there is a chance that we can have, sharp pullback. So risk reward doesn't make sense. If it does break above this level, then you have a clearly defined stop level, right? This breakout. But until then, you don't really have clear stop loss. Maybe it's the August high is your stop loss. And it's pretty far away from that level. Any questions in terms of rotation? Which sectors can outperform the market? All right. Let's give me 1 second. So we do have a quick announcement. So we do have different services that I went over, right? Some of them based on monthly, some of them based on quarterly payments, annual, lifetime. We have different services, so it can get complicated in terms of figuring out what's the best pricing for the service. So if you are interested in paid subscription, or you're trying to find savings, right? Because different plans. We do have Jordan. You can give him a call. You could save a lot of money, especially if you go with lifetime subscriptions. So I'm gonna write down this number, 312-625-0287. If this is something you're interested, please give him a call. He's well versed in our products. He understands trading. He understands the products, the pricing structure. So give him a call. If you're not interested in paid subscription, give him a call just to say hello and maybe learn about the product. So that would be great. Again, his name is Jordan. He's here in the United States, and his number is 312-625-0287. Also, we do have YouTube, right? We do have YouTube content. So every Wednesday, if you want to participate in live trading room, just try it out. Don't trade on your own. Become part of the Tradespoon community. We have live trading every day. We have questions. We have people with different background, different portfolio size. You can always bounce your ideas. So on YouTube, it's available. You can participate to try it out for free. Morning bell and closing bell on YouTube. If you haven't subscribed, hit the subscribe button. So I think there's very valuable content that can help you, look at different perspectives, different, pros and cons for the bull, being a bull or bear, or think that the market is going to trade sideways. Any questions? So that's okay. So we talked about Jordan. We talked about YouTube. What else? Any questions? All right. Some other strategies that work in this market environment. We do have earnings, right? Every week there's at least a couple earnings. We have Adobe. We discussed Adobe trade in closing bell. So selling out of the money premium. If you think that the market is overbought, right? Whether you sell in calls to protect your stock, cover calls, or you sell iron counters, this is an example, and especially with the premium, right? You can see kind of this irrational exuberance in retail flow by looking at the prices that people, willing to pay. So this is a 0.5% that I was able to collect on June 145 call. right, when Oracle announced its earnings, right? So there were, a lot of people that thought that Oracle can rally, at the time of the earnings, it was what, 115, 25, 30%, where Oracle usually, even if it has great earnings, right, it does not move 30%, right? With the idea, again, the AI and all the benefits that AI can provide. So we are trading, at multiples even higher than they were in 21 on Oracle, with the idea that, they can capitalize on the AI products. Any questions? So that's, that's pretty popular trade, even though VIX is low, right? The advantage of the earnings is that, especially in some of the names like Oracle or Adobe, was the same setup, right? I think we sold what, almost 20% out of the money calls, collecting 40 to 50 basis points, right? I mean, Adobe had good earnings; they were great, but right now everybody expects that every single tech stock that will announce earnings will react like Nvidia, up 30%. But obviously, not every tech stock is going to be like Nvidia. So you can take advantage of that extra premium in the options by selling, out of the money options, right? You probably don't want to buy out of the money options because Adobe and Oracle probably will not move 20, 30%, especially after the vertical rallies that we had. And that would be one other strategy that works well in this market environment. AI done like long term or long just buy AI? And are we talking about just general AI or AI specific stock? So, I mean, if we're talking about AI specific stock, whether it's AI or Pelletier, right? Definitely you can see it slowly losing momentum. And we do have this elevator up, right? Usually it's followed by elevator down, right? And even Microsoft, traded Microsoft, it's made new highs, right? Marginal new highs. So the question is it a sustained breakout and it's going to continue going higher in the next few months? Or is this elevator up and at some, I'm not sure on which floor, is it floor number 10, floor number 50, but at some point it's going to be elevator down, right? This typical blow off top phase, because it's not driven by immediate earnings, right? When these companies are going to start announcing earnings, they have to justify these rallies. And Adobe and Oracle did, right? They didn't pull back. So I think short term, long term, I think AI is here to stay, right? And people are going to take advantage. It's going to create jobs. It's going to replace some jobs. There's definitely benefit to the AI. And there are multiple applications, and this is going to be probably like invention of cable or air conditioning or iPhones, something along those lines, right? In the next 3, 5, 10 years, AI stocks will continue its march higher. But these stocks, they never move in one direction, right? So there will be pullbacks. It does feel a little overextended, or a lot overextended to me. So personally, I would not chase them at this point. I think you're probably late to the game. I would wait for meaningful pullbacks in Microsoft, AI, Pelletier, Nvidia. This is a test, right? Like I would look at Microsoft, can it break through all-time high? Apple, right? It looks like it makes new all-time highs. Again, week 1, week 2, it's above this level, but it's still kind of a marginal breakout in some of these names. And Nvidia, right? Probably the most important is Nvidia. Nvidia, has continued to make new highs after the earnings. Even this week, I would keep an eye on Nvidia or just semiconductors in general. Is it able to break through this level? Or if not, if it's unable to break through this level, then it will pull back. Long-term Pelletier, I mean, I think AI stocks long-term will continue to go higher. You know, will it be at 750? Probably not, but can it be at 1250? Probably yes. So I would rather buy at 1250 than 1650. We do have a 3-day weekend. Thank you, Don. Yes. So Monday is a national holiday. Markets are closed. So next session would be Tuesday, live trading room. So I hope to see you on Tuesday. Any other questions? All right, if there are no other questions, just a reminder, I do encourage you to give Jordan a call, right? I put down the phone number in chat. It's Chicago area code 312-625-0287. Give him a call. If you're looking for subscription, if you're looking for savings, this is your opportunity to find the most optimal, pricing structure or the most optimal service based on your own needs. And we have different subscribers with different, experience levels, different portfolio sizes. So I think this would be a good use of your time. So please give them a call. Otherwise, let's see. I'm going to stick around for the next few minutes just to see if you guys have any questions. Otherwise, that's all I have for today. Have a great long weekend. Enjoy time with your friends and family. Any other questions? All right, if there are no questions, that's all I have for today. Thank you very much and have a great long weekend. Spend some quality time with friends and family, and I will see you shortly. Thank you.